Hi everybody, Patrick Donnelly here from Donnelly Financial Services. Today I'm going to walk you through how to make a backdoor Roth contribution, which may sound a little bit complicated, may even sound a little bit sneaky, but I assure you it's perfectly legal in the eyes of the IRS and actually a fairly common practice among high income earners. So to start, why would you need to make a backdoor Roth contribution? The reason being are what are known as income phase-outs. Essentially, the IRS has put a limit on high income earners' ability to contribute to the Roth IRA. More specifically, those thresholds in the year of 2021 for single tax filers would be $140,000 of adjusted gross income, and for married filing jointly taxpayers, that income limit would be increased to $208,000 of combined adjusted gross income. So, if you are above either of those thresholds, but still wish to contribute and take advantage of the massive tax advantages that come with a Roth IRA, you will essentially need two accounts in order to execute this transaction. The first one being a traditional IRA. Now, as we discussed in a previous video, a traditional IRA is a fairly simple account to get open. Go online to basically any asset manager, putting in your information, and the account should be open within a number of minutes to maybe a couple days. For this particular transaction, a backdoor Roth, I would encourage you to open up a traditional IRA at the same institution where your Roth IRA is currently housed. And then, of course, the second account that would need to be opened is your Roth IRA. So, in order to actually execute this transaction, we'll talk about in the next section. So, once you have both these accounts open, you are essentially ready to make a backdoor Roth contribution. The process is fairly standard across most asset managers and is repeatable on an annual basis. So, the first step will be to make a contribution to your newly opened traditional IRA. The 2021 max annual contribution limits do apply here, so you would be able to contribute up to $6,000 to your traditional IRA. Once you see the money hit the account, wait up to 3 business days, call up the asset manager, most likely a customer service line, and let them know that you would like to make a backdoor Roth contribution from your traditional IRA to your Roth IRA. This process is known as recharacterization in the eyes of the IRS and allows high income earners to recharacterize their traditional IRA contributions into Roth IRA contributions. Once this internal transfer is initiated, you will then see the contribution hit your Roth IRA account, and you will be able to invest that money as you would in any other investment account. However, with the tax benefits of a Roth IRA as opposed to a traditional IRA because of the recharacterization process, meaning your investments will not be taxed as income or capital gains. So, with that being said, you have essentially executed a backdoor Roth contribution. This process is repeatable on an annual basis, and I would highly encourage you to do so if you do fall above those phase-out limits on an ongoing basis. So with all that being said, I hope you found this helpful, and once again, if there are ever any questions, please reach out to me via my website.